Good morning, everyone, and welcome to Monday Morning. It's Stephen Whiteside here from theuptrend.com. Well, today's a different day for us. Typically, we cover the North American markets, and the Canadian markets are closed today for the Thanksgiving Day holiday. So, a shout out to all our Canadian friends and family taking the day off. Of course, a lot of them will be watching this presentation because they do trade the U.S. market as well. Now, Friday, it was raining sell signals, and so you're coming into Monday's trading action, and you have a lot of sell orders to place this morning at the open. We do have stock index futures trading higher this morning. They've been trading around these levels since the market opened at 6 p.m. Sunday night, and so not a lot of real change here since those markets opened, and certainly not doing a lot of damage to the big down move that we saw on Friday. Now we get to do a couple of things this morning. First of all, we get to sell into strength. So it's good to see the stock index futures trading higher. We'll get a better price when we sell at the open on Monday morning than we would have if we had have sold at the close on Friday. And we also get to switch from bull ETFs to bear ETFs. And again, we get to take advantage of the up move in the futures in the pre-market on Monday morning. Now, there's no economic numbers today. Of course, U.S. government is closed, so we're not expecting any numbers from the government. Now, the price of gold was up on Friday, didn't take out the previous highs from Wednesday and Thursday, but we're going to do that this morning with gold up about $100 right now. We're trying to break out about 4,062.50. If we can do that, then 42.1875 is our next target to the upside. And of course, the price of gold keeps going up because of global concerns about what's going on in the U.S. right now. Now, crude oil had a big down move on Friday, and it is up in the pre-market this morning, not enough to erase Friday's losses. And when we look at this chart contains all the major moving averages, and a lot of people would look at those moving averages as potential areas of support or resistance and as potential price targets. And here we are. We basically have a wall of moving averages here as crude oil has not been trending for quite a while. It is now starting to break out and trend to the downside, but if it does start to come back, all of those moving averages are going to act as a wall of resistance. Now, we've been talking about not crossing the streams when it comes to the VIX ETFs, and what do you know? Well, on Friday, the streams crossed, as you can imagine. Now, coming into Friday, the difference between the pros and the public were the closest that it's been in months. And then Friday, it exploded, and we had a big pop in the VIX, not only on the daily charts, but the weekly charts as well. Now, looking at the S&P 500 futures contract, we were down 184 points on Friday, which is a huge number, but because we're up at nearly 7,000, it was only 2.71%. It did erase a month's worth of gains, though, and so we're back at where we were back at September 11th, and we are holding support at the 65, 62.50 level. If that breaks, we certainly have several areas of potential support, but our next mathematical target would be 62.50. Looking at the moving averages, and unlike crude oil, where the moving averages have all converged, we've been trending higher for a while now. So we did trade down and close at the 50-day moving average. You can see where the 100 and 200-day moving averages are, which could act as potential support if we continue to move lower from here. Of course, the pros did give up control on Friday, and we'll be watching to see if the pros can take the market back throughout the week. Now, when we look at, how far we dropped on Friday, it was 184 points. So a 50% retracement of that would be a gain of 92 points today. And we're in the 60s at the moment. So we're not getting anywhere near the 50% retracement level of Friday's big down move. So we'll be watching that level throughout the week to see if the market can recoup some of those losses. And if can start to break out above the 50-day 50% retracement level, then that would be a very bullish sign for the market. Now, looking at the S&P 500, we can break it up into sectors, and then there are subsectors within some of these. And it's interesting to see that there's two areas of the market still holding up, healthcare and the utility sector. Otherwise, a lot of sectors or areas of the S&P 500 were already on sell signals coming into Friday's trading action. So communication services was already on a sell signal. We've got consumer discretionary, consumer staples already on a sell signal. Consumer staples took a run at a buy signal on Friday, but then reversed and just closed up 6 cents on the day. We had the energy sector already on a sell signal. We had financials already on a sell signal, and we'll expand on that in a minute. Healthcare is still holding up, still on a buy signal here, trading in the channel on Friday. Then we've got the industrials back on a sell signal as of Friday's close. Then we've got the materials already on a sell signal, so no change in trend there. New low for real estate on Friday, no change in trend. Now, we know that, those big cap tech stocks have been leading the market higher, and here we are. We made new highs last week, and then on Friday it broke down, and we're back on a sell signal for the technology sector. Utility still holding up fairly well. They closed lower on the day, but still holding up and still on a buy signal. Now, within the technology sector, you've got semiconductors. They were down nearly 7% on Friday, back on a sell signal. Then looking at within the financials, you've got banks, and banks have been on a sell signal for a while now, so have the regional banks, so no change in trend there. And then just looking at consumers, the retail sector has been on a sell signal for a few weeks now, and it dropped over 3% on Friday. So just a couple of sectors were holding up before we had the big sell-off on Friday, which included a lot of those big cap tech stocks, which you can find in the Magnificent Seven. So there's the NASDAQ back on a sell signal. There's the Magnificent Seven stocks back on a sell signal. And then individually, we've got Apple back on a sell signal. Amazon had a big reversal. It's back on a sell signal, still holding the recent low. Then we've got Alphabet back on a sell signal. Big reversal for Meta. Then we've got Microsoft now back on a sell signal as of Friday's close. We've got Nvidia back on a sell signal as of Friday's close. And we've got Tesla back on a sell signal as of Friday's close. We also have Broadcom reversing back on a sell signal, and Shopify back on a sell signal as of Friday's close. So as I mentioned at the start of the presentation, it was raining sell signals on Friday, and now we have the opportunity to sell into strength on Monday. And we'll also be reversing, going from being long the bull ETFs to being long the bear ETFs at the open on Monday morning. Okay, folks, that's all for this morning's presentation. Have a great day. From our Canadian friends and family, have a wonderful Thanksgiving, and we'll be back again on Tuesday morning to take a look at what happened on Monday.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.